Good night, but I don't hear no audio.
Good night, Harcourt.
Oh, okay. Good night. I hear something now.
Yeah, that's me. I was on mute for a second. How you
How you
been?
been? All is well. Can't complain.
Very good, man. Very good.
Waiting to
Yeah,
see what you
tonight.
waiting to see what you have installed for us tonight with this new thing.
Yeah, yeah. We're gonna do two things tonight. We're gonna do a live trade. I'm going to show pure price action using demand and supply, and then we're gonna talk and answer any questions about C trader. Copy trade.
All right,
I'm
sir.
gonna do. I'm gonna look at the setup for US 30 and for gold. Maybe GBP USD as well.
So, what percentage of tonight's presentation will be about the copy trade aspect?
Um, it actually, I'm allotting just a little more than 50% of the time, depending on who else here and how many questions people have. So I'm going to go through the trade setup first very quickly and then allot the rest of the time to talking about copy trades.
Okay.
Yep. Okay, I tried to wait for one or two people, but I'm not going to wait too long. I think we have Ginger and we have you. I'm going to give it 2 more minutes, guys, and then we'll get started. Ginger, how are you?
I'm Super Marvin. Can you hear me?
Excellent, excellent.
Yeah.
Yeah. Well, you turned 60 last time. I turned 55
Mm-hmm.
yesterday.
Oh, your birthday is April too.
Yeah,
Oh,
yeah,
okay.
yeah.
Happy belated. Happy
Thank,
belated.
thank you, thank you.
What you said? 50 what?
55.
5-5. Oh, I have you by 5 years.
Yeah,
Oh, okay.
and the shame about it is I look older than you.
Don't worry about that, honey. You have the trading skill. That's what counts. Hey, hey, it doesn't matter if you're old and you look old and you're rich.
Boy, well, I would like to look younger.
You look
I
young
do.
and broke.
No, man, none of us, none of us, none of us. Well,
Yeah,
I mean,
happy belated, Marvin. What did you do? Anything?
no,
Went
nothing
out for dinner?
special. No, nothing. Man, I'm no big shot like you. You know, you're a
Uh,
big shot. You just don't want
n-
nobody to know.
No, that's not true. I plan my big birthdays. All the tens, like the 50s, the 60, the 30, the 40.
Yeah. Well,
Yeah.
that's good. That's a very smart thing.
The other ones I go to work. But the
Oh,
big ones I plan them properly. Yeah.
awesome, awesome. Well, I had a wonderful day. You know, my parents were never married all my life. They both married other people. So I've never
Hmm.
grown up being around my parents at the same time. So
Wow.
yeah, Saturday is special because, um, of course, they're all much older now, and they both came to spend the day with me together, which is
Oh.
yeah, that was really cool.
Oh, that's nice.
That was nice.
That's nice, Marvin.
Yeah, I see. I don't know what it is to look at my dad, turn my head, look at my mom, and they're right there. So it's just nice to
At
see
the
them.
same time, yeah.
Yeah,
See the two of them together.
yeah, man. So no big celebration, but that was my special.
Mm-hmm.
And my boys
That's,
came as well, so we all spent the day
uh-huh.
together.
Okay. Can't ask for more than that.
No, I'm
At
happy
least
with
they
that.
all alive. They all
Oh yeah,
alive.
all alive and
Yeah.
took pictures and dad played with his grandchildren and it
Mm-hmm.
was good. I'm happy.
Did your
I,
parents bring their spouses?
no, funny thing is they are both divorced now.
You're joking. Oh,
Yeah, it's so funny. They both been
wow.
divorced for years
Oh,
now.
man.
I tease them yesterday. I say, okay, y'all two cutting up. What's going on? Ah, yeah, man.
Oh, so that's probably why they were able to do that
Yes,
successfully.
yes, yes, yes.
Yeah.
Look, they've become much closer and better friends over the last couple
Right.
of years. So,
Right. You get over your pettiness.
yes, yes.
Hmm.
So I've been enjoying it. Well, friends, I think we have 3 or 4 people. It's 7:10. Let's get started, man. Let's get to trading.
Now, Marvin, this meeting isn't going to be no longer than an hour, right?
Um, I'm gonna
Hour and a
try to
half.
keep it. I'm
Hour
gonna
and a
try to
half
keep.
at
I'm
most.
definitely gonna keep it under an hour and a half, under an hour
Okay.
if possible. All I'm gonna do tonight
Hmm.
is I'm gonna run through the trade setups, and then we're gonna spend the
Hmm.
rest of the time talking about C Trader, because as of tomorrow, I will begin connecting anybody who was ready to go.
Hmm.
Okay. There's no pressure. It's just that once you're ready, I'll connect you, but I won't start connecting anybody until tomorrow or so.
And when you're
So
going to start trading.
I'm gonna start trading tomorrow.
So
I'll
if you
start
get connected
tomorrow.
tomorrow, you start trading with the $300 tomorrow too. I mean,
Yes.
or like Tuesday.
Yeah. So yes, like
Oh.
Tuesday. Sorry, like Tuesday. So anybody who
Hmm.
gets connected now will start.
Hmm.
Um, and also, if anybody who wants to connect on a demo, they can start as well to
Hmm.
trade. Okay, so of course we have the one and only Ginger and Harcourt, and I think this iPhone may be Mr. Strong. You
No,
can let
that's
me know.
Bridget.
Oh, Bridget, what happened to your name? Where's your name? Okay, all right, guys, let me get into the trade, and then we'll get into copy trades. Okay, so I'm going to show you guys what I'm going to be trading.
Marvin, you start recording yet?
Um, Harcourt, you're the best, man. You are the best. You are the best. I am the worst.
That's okay.
Yeah, I am the worst marketer in the world. Oh my God, I'm so, hey,
Recording in progress.
I want to just hire someone to manage me one day. Just let me trade. Um, okay, we're recording now. We're live tonight. We're going to be looking at setups for US 30 and for gold. And if time permits, we'll squeeze in US 30. GBP USD. But what I want to do tonight, I'm going to share with you how I'm going to be trading on copy trades. I'm going to be trading supply and demand, which is the same thing as order blocks. And to put it in more familiar terms, it's just also a more detailed way of identifying major support and major resistance. Okay? Supply and demand is something we used to hear back in the day at Master Trade House with the guys from Florida and other places talking about this supply and demand. Um, Years ago, I didn't understand it back then, but now I understand why these guys were so successful trading, because supply and demand is one of the most successful price action trading strategies in the world. And it's based on what we call smart money. Smart money is a concept that allows us to follow the market makers, the big banks, the big institutions, the people who have enough money to actually move the market. And we don't follow them. What we do is we follow their footsteps. In other words, we let them show us their hand, like playing poker or one of those games, because I don't gamble, but I think it's poker. Okay, we let them show us their hand, and then we react to their hand. Okay, so they walk, we check the footprints, we see where they're going, and then we respond to what they do. Now, supply and demand, sometimes it may sound like a very complicated subject, but it's not. All it does is it tracks either, like right here, aggressive selling or aggressive buying. It's as simple as that, folks. When you see the market is showing you an aggressive selling move, that is a move that's showing you that the market makers are in the market. I also call them the smart money, okay? Because they are the only ones who can make the market move like that. You and I, shooks, we can't create a blip. These guys are moving billions of dollars at a time. So when you see these guys move the market, and they move the market in an upward fashion, they push the market up, you know that's the big boys, the market makers, the smart money. Now, every time they push the market up, they leave behind a footprint. And the footprint tells us that there's a particular time when, before they push the market up, where they made an investment to make that happen. Let me find a better example before I come back to the monthly one. Let's find a better example. Okay, we can use this here. Yeah. Okay, you see these candles. When you see the market gives us these nice, long, bullish candles, preferably back to back, you know right there is the market makers. But when they do this, they leave behind a footprint telling us exactly when they invested into the market to make that happen. And that period of time is the last candle before they took off. So what am I saying? I'm saying that this candle right here was the last candle before they pushed the market up. Okay. Y'all forgive me. I like colors. This is green. All right. So during this time, they invested into the market to cause this to happen. And this area here is referred to as a demand zone. This is a demand zone. They are filling the demand of the market right now. Okay? Now, let me explain it in terms of price. If you wanted to buy, what do you do when you buy in business and in trading? How do you make money? You buy low. How do you make money if you want to sell? You sell high. We all know that. It's basic. Buy low, sell high. Okay, so if they bought at this price down here, this is the lowest price at that time. They bought at this price. So all of this was a good profit for them, right? Let's say you want to take the market higher than this right here, or this high, okay? Let's say you want to, they want to continue buying. They're not finished buying, all right? They make the first push and they bought. Now they want to make another push and they want to buy again. Well, they've got to find a way to implement the same concept. They've got to find the next lowest price because they want to buy low. So the market meanders up, does a half circle, and the market drops. The market drops and creates another low. But now this low is higher than the previous low. So this becomes another point where they buy again. If you begin to think about it in terms of price and selling and regular business, the concept will make sense. Now, most of you already know the concept by another term, but I want you to think about it in just logical terms of business, okay? Buy low, okay? The price get kind of high. You say, I'm going to wait till the market drop again. You wait till the market drop, the price gets lower, you buy again.
I want to get a question. You can hear me?
Yes, I can hear you, man.
Oh, okay. This buy low and sell high structure that you were talking about from last week to today, which time frame would have the most accurate movement? Because I know you could go down to a 5 minute time frame or 15 or an hour. Which one of these time frame would be the most accurate to follow the market structure? Or
Okay,
all is the same?
I can answer that for you clearly. There's no one that has the most accurate. First of all, like you said, this pattern, this structure plays out on every time frame. But the higher the time frame, the more accurate the result. As a matter of fact, to trade this, if you want to trade a 5 minute chart with this concept, you actually need to go from the monthly and work out something called market structure. You've got to work that out to make sure that you know which direction the market is moving in when you get down to that 15 or that 5 minute. But you can find this on every chart. But if you do it on a higher chart first, that higher chart will help to show you where the lower charts are going. And the picture, the structure of demand and supply will be clearer. It's less candles. So right now, for example, we're on a daily chart, and becomes much clearer. You can see the structure and you can see the market comes back to create a low, but it's a little higher than the previous low. And the market likes to come back to this area, the same zone we took off from here. Why? Well, listen, if you make an investment, you want to try to find a way to recoup that investment as much as possible. It's not our business. If you bought low down here, if you can find another way to buy again at a low close to where you were before, man, you can recoup your investment. And that is the movement of the market, and that's what these guys are doing. So how are we trading? We are waiting to see how the big boys move. When we see a movement in the market where we have aggressive buying or aggressive selling, like in this case, aggressive buying. That tells us the big boys, the market makers, or we call smart money, is moving. Okay? If you're trying to look for a trade, this is not the trade you want to take. Because once you see the, the movement, you want to come back to the footprint. You want to come back to the zone. And what we're doing now is waiting for the market to come back to that zone. When the market comes back to this zone, this is where you're looking for a buy. And then you catch the move going up. Now, this concept is so familiar to you guys. I may make it sound like it's something new, but I just want to give you a different perspective. All this is A, B, C, D. Simple as that. It's
So,
a Fibonacci sequence. That's all it is.
so Marvin, I got a question. If you're waiting for the market to come back to a zone, let's just say you're in a daily time frame, you can probably wait a good few weeks. Easy.
Yes, if you're trading a daily trade, the daily chart, yes, we will wait for a while.
Because that's
So
about
most
3 months
traders,
wait right there. That look like about 3 months or more.
yeah, that's true. There are some traders who trade the daily chart. They will wait for that move. Trust me, they will wait for it. But, but most of them, especially if they're trading Forex or something, they don't limit themselves to one asset. Some traders, remember how we used to trade 20 cross and close? We went through all of the pairs. Remember that? Many of them trade that way. They wake up every day looking to see if any of those assets have come to a zone. That's all they're looking for, that setup. I mean, there's more detail to what I'm telling you, but that is what they do. They go through all of the pairs, or they may have a handful that they trade. If you're trading the daily chart, yes, if you're trading this strategy, yes, you will wait. But in our case tonight, we're not trading the daily. We're trading a much lower chart because we can't afford the large stop losses that accompany these big charts. I'm just using this as an example to show you the concept that we'll be using to trade copy trades. Okay, so once I've identified this zone, I stretch it over and I wait for the market to come back to it. Now, what you have to imagine is this zone here is a zone where the pressure to buy is very strong. This was a price level where the money, the market makers invested. So there's a lot of pressure to get back in the market at this level to buy more. If they really, really, really want to buy more, they will push this market from here back up, breaking the previous highs. This concept works best in a trend. If the trend is going up, you're gonna find these guys pushing the market up, making higher highs and higher lows. Okay, so right now this structure here, the market is actually in a downtrend. Okay, so we're making a high and then we're making a lower high. As a matter of fact, it starts from up here. There's a high and lower high and lower high. That's a downtrend. Okay, lows, lower lows, lower lows, which means every time the market hit a certain level, like up here. The market makers sold off, but they said, man, we ain't finished selling. We want to try and sell again at a higher price. They wait until the market comes back up here, and then they sell again. And in this case, I can show you, I'm not teaching you how to draw and how to figure all this out yet. That's a different course, seminar altogether. But let me just show you so you can see how it works. When the market came back up, this run here left a footprint back up here, giving us the what we now call a supply zone. Okay, the supply zone representing where these guys made their investment. Okay, that supply zone is this area right here, and as you can see, in this area here, the market came back into and touched this zone. And what did it do after that? Drop. Hardcore, that's why the guys who are trading this is all they look for. They're not sitting around waiting for all of this to happen on one chart, on one asset. No, they're looking at all their assets for a market that's close to coming back to build this structure, okay? Because they know once the market hits that zone and they've already identified that the market is in a downward trend. That's the first thing. You don't just do this all the time. You have to look to see what confirm the trend of the market.
All right,
If
I
it's
have
a
a.
downtrend,
Uh-huh.
they will expect the market to touch the zone and drop. Now on a daily chart, you know how much pips that is on a daily chart? And in US 30, millions, millions. So they sold off, created a new low. Then they said, man, we ain't finished selling. We want to sell some more. So they wait. No, first they said they re-identify the footprint. We go back, we find the footprint. We took another zone where they made a decision to sell. It would be this zone here. Okay, basically the last candle. Okay, some traders will take the whole meat of the area, which would, I can't move, which would be kind of like this area here, not there, here. But it works by just taking the normal procedure, taking the last candle, okay? So they sold off, wait for the market to come back and do what? Touch. And sometimes it is only a touch. It did not touch here, okay? Coming here is what they call this inducement. It's an inducement to sell, but it's not the real sell. It comes back and then it touches the zone and then it drops. Now, if this market continues to be bearish, we're going to expect the market to drop and do what? Break these lows. If the market is bearish, it will break these lows. The history before is showing us a bearish trend. So in terms of setting a goal now, a take profit goal on the daily chart, one of your first levels will be right at this low. Okay?
So Marvin,
So
before you go on, another question: What what percentage of the structure that you're showing here will always be the reoccurring way of it working the way you're explaining it? I mean, would this happen every time you see a structure like this 100% of the
No,
times, or
no, no, it won't happen every time. It won't happen every time. No, 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 no. First of all, it depends um, on a big picture, even the time of year. This is what, May. I think April and May are what we call trending months. A lot of markets will tend to trend during these 2 months. So when the market is trending, you will see this more often. Sometimes you will see a setup like this. Excuse me. the mark the smart money came down with strong bearish candles selling. So you say, aha, I see your hand. Let me go back and follow the footprints back. Go back. Let me find your supply zone. This is the zone they decided to supply the market with product. Okay. You go back. Let me mark off my zone. And I'm going to now wait until you big boys decide to come back to this zone, because I know when you hit this, you're going to say, man, this is a good opportunity to recoup our money. This is the closest we're going to get to our previous price. We got a high price here and we sold, made money. Well, we have another high price. So we're going to sell again and we're going to drop. Just like happened on this one, drop. Just like it happened up here, drop. So this is the drop we're in right now. This will happen mostly during trending months. It can happen in non-trending months. There's some other trending months as well. I'll put a chart in the group one maybe tomorrow. We will get more trends. But the concept doesn't only work when it's trending, but it doesn't mean every time you see the setup that the market's going to do this. You see, let me give you an example. Here is a low. If the market decided to change at this low and we go change into a bullish trend, it means you see this, they buy off, they come back up. What's going to happen though? They are not going to respect this. It's going to just push straight through. Why? Because the direction has changed. That's why I said in the beginning, you have a very, very important part of this is understanding market structure and knowing which direction the market is in. Give an example. Right now, we're in a bearish trend. We saw it already, okay? High, low, lower high, lower low, lower high. Now we're hoping to make a lower low. Now, if this high went above this high, I could no longer say that we're in a bearish trend. It has changed. What happens is people get stuck in this bullish move, okay? And they don't have any way of seeing on their chart, hey, this bullish move this bullish move didn't stop here. It kept going. When some people are trying to sell, because you think, that's what I'm trying to say, you have to be aware of how the market has changed based on the chart that you're on.
Marvin, are there 3 points or principles that you can give that we can look for to recognize when the trend has changed?
I've actually been giving it to you. It is actually understanding a Fibonacci sequence. If
Okay.
you understand the Fibonacci sequence, you've got it. See, because I already know this is a high. And by the way, I use fractals, these round dots at the end of the candles. They give me what we call fractal highs. Those are those are real highs, okay? And I take the highest high, the lowest low, and after the lowest low, I look for the next highest high. After that highest high, I look for the next lowest low. After this, I look for the next highest high. Because my mind is always conscious of the Fibonacci sequence, once this high forms, or in this case, once the market respects this supply zone, oh, so yeah, once the market respects it, then I know that the market has maintained its bearish structure. If the market didn't respect this and pushed through and went past this high, my structure has changed. Okay, so speaking of that, let's go back now. So hardcore, what I'm saying is that knowledge, that understanding doesn't come from just 3 points. It comes from all the points related to understanding the Fibonacci sequence. Because
Okay.
all this is understanding the Fibonacci sequence. Let me give you an example. If you understand the Fibonacci sequence on a downtrend, and this is a lower high, for the sequence to continue, it has to break this low. And if it doesn't break this low and forms a fractal low before hitting this low and reverses and goes back up and breaks this high, brother, you are no longer bearish. You are bullish. You are no longer bearish. You are bullish. So let me show you how we're going to approach the analysis. Okay. I will be starting from a monthly chart. And all I'm going to do on a monthly chart is mark out the most recent highest high and highest low. I mean lowest low. Okay. This thing won't come out the way. So you have a high, you have a low, and so far you have the next highest high on a monthly chart. That structure alone tells me it's possible that this is going to be a bearish move, okay? It has the makings of a bearish move on a monthly chart, A, B, C, D. Let me take all of the stuff off. You can see three fractals, A, B, C, maybe D is down here. And when you analyze these charts, I've learned to keep stripping my charts down. If you notice, I've been taking more and more things off my charts because price action doesn't need all of those stuff. One or two basic things. Now, one thing you have to notice here, this is a 20 moving average. And Harcourt and Ginger, who else is here? I think no one else was here from back then. Although I see we have, hey, Troy has joined us. Troy, welcome, my brother.
Yeah, just tuning in.
Yeah, man, I saw you. Okay, we're talking supply and demand and how we're going to trade how we're going to trade copy trade. So this is a 20 moving average, and back from 20 cross and close, remember, if the market stays above the 20, you are looking at a bullish trend. If the market stays below the 20, you're looking at a bearish trend. Now this market on a monthly chart has been above the 20. From here, it was above before, took a dip below, came back, and it stayed above the 20 the whole time. Okay? Now, when the market wants to stay above the 20 and makes a pullback, it will make a pullback to the 20 but bounce off it, which means, A, I am not ready to go bearish. All right. Now, what we have to determine here is whether or not the market is going to reject the 20 and go bullish, or it's going to break the 20 and continue bearish. We are right at the verge of determining that on a monthly chart. The structure suggests bearish. Boom. The way the market is hovering on the 20 right now suggests bullish. The SRSI is hard and oversold. Okay? That oversold position suggests that the market has hit the 20 and is not planning to go any lower. It is a suggested position. Because the market has hit an oversold position down here, it doesn't mean that it's going to go back up right away. That is something about the SRSI and other indicators. You need to know how these actually perform. Okay, the market came up here and continued and continued and continued. Just because it came up and passed the 80 mark, there's an 80 mark here, as you can't see unless I open it, okay? Doesn't mean it's going to drop right away. That continued bullish for a couple of months. So we have to watch how the market moves and try to determine what's going to happen here. That's where we are on the big picture. Okay, if the market breaks this 20, then you can look for some bearish action. So the only way we're going to work this out though is as we drop to lower charts, we have to see when the lower charts have stopped being bearish and start being bullish and breaking the structure, then we begin to see that turn for a bullish position by rejecting the 20. However, if the lower markets continue to show bearish strength and eventually close on the monthly chart below this 20, then we should be looking for more bearish action. So
So Marvin, I got a quick question before you go on. So when you say break to 20, do you need a whole candle formation to conclude that?
on the monthly chart, yes,
That candle right now that is forming, that have to be completed, right?
yes,
Okay.
closed
Okay.
on a monthly chart. But don't forget now, there are ways to catch the market closing below the 20 on a lower chart. We don't have to wait the whole month to see if the market will close above, below the 20. Hey, I'll show you a simple thing real quick. It's so simple, you won't believe it. That's a monthly. On the weekly chart, look, the market needs to cross that white line. If the market breaks that white line, it has crossed the 20 on the monthly chart. Look how close it is to where we are. We are right, right up to it. On a daily chart, we can see it. The market needs to cross that white line to break the 20 on a 4-hour chart. We can see it. The market needs to break this white line to cross the 20 on an hourly chart. We can see the market needs to cross this. So I can leave it on my chart now, even go into lower charts, and I begin to get some idea when and if the market crosses this. If the market does cross this on the lower charts and keeps giving us a bearish sequence and going down, we know something's going on. Okay? But let's go back and let me quickly go back to how I'm going to analyze the structure using the Fibonacci concept. Okay, guys, give me one quick second. I'll be right back. One quick second. Okay, my apologies. I'm back. That was a little emergency. Okay, somebody say something to make sure you can hear me.
I can hear you.
Excellent, excellent. Okay, so the monthly has this structure, all right? Basically by Fibonacci A, B, and a C. Now, if this is a C, it means we're on the monthly chart, we are in the middle of a sell off. Okay, so the monthly chart is still selling, but we don't know how far it's going to sell because of this, but it is selling. Um, okay, the weekly chart I also have marked off. And when I do this, I'm really only looking for what we call the last major swing. That means the last major high and the last major low. Now that's daily. On the weekly chart, using my fractal highs and fractal lows, I can actually map out my sequence of weekly swing highs and swing lows. Swing high, swing low, swing high, swing low, a swing high. That's the last swing high. Okay, this the last swing low. So right now the market is between this swing low and this swing high on a weekly chart. All right. Now look at it. A, B. Is it going to continue down or not? We are stuck right here at the 20 moving average of the monthly chart. So right now, all of our attention is right here on what's happening. So this candle is a very important candle that needs to be watched. But what I am doing right now is something called a top-down analysis. And what I'm also doing is I'm mapping out the structure on every chart, major chart, in order to find my trade on a much lower chart. So when it comes to this right now, I am right here, okay? I use colors, so I don't want to throw you off, but this weekly chart for me is a purple. This is my last high. So now when I drop from here, I'm going to focus on this on a lower chart, because on the weekly chart here, the market is selling. It's a sell. But I need to track and pin this down to a lower chart. So I'm going to focus in right here. And I go to a daily chart. Daily chart is red. Um, that point we were at on the weekly chart was right here. Okay. And the market is selling off. So I'm looking for a swing high on the daily chart. Okay. That's my swing high. Now check it out. I do not yet have a fractal. This right here is a fractal high. I don't have a fractal low. Now, let me take everything off. I believe that this is going to be a fractal low. And it's going to give me a swing high for the daily and a swing low for the daily. Now, this doesn't mean that the weekly is finished if the market is continue bearish. Okay, let me show you quickly. Here is the weekly. If the weekly is going to be bearish, this has got to drop below this low, which means this has all the way from here to low down here to go. Okay, now this green line is from a company called Trading Central. They are predicting that the market is going to drop. Okay, that's their opinion. And this is their target. You see? They're thinking the same way. Okay? So The weekly should be dropping all the way down. But no matter what chart you're on, the market will wave. The market will give you waves from smaller charts. So even though the weekly is being projected to drop down to here, you may have one wave before the market comes back down to here. And if that is correct, right here, go back to the daily. The daily is going to give us a swing high, a swing low, and maybe a pullback. Now the pullback is the same thing we mentioned earlier, which means if the daily pulls back, we want to expect the daily to pull back to a supply zone, which is right here. We want to expect the market to pull back to a supply zone before it continues. Let me make it a little smaller. Smaller, Marvin, smaller. Okay. If this becomes a swing low, hold on, let me take this off. If this becomes a swing low for the daily and the market pulls up, we are hoping that the market is going to pull back into this zone, which is our supply zone, and then drop down to here. Now, if I were trading the daily chart, like we said, hardcore, I would be waiting for the market to hit this zone and catch that drop down to here. That's how we're trading. Okay, if we have a zone that's a target, it means that you don't take the trade until the market hit your zone. And the zone that we're identifying here right now, we would call this our point of interest, POI, right here. Now, the question is the market going to turn around and pull back and then drop, or is it going to just drop? At the moment, here we are on the daily chart. We know exactly where we are. Let's take this area now and drop this down to a 4-hour chart. So on the 4-hour chart, we come to the market and we find that the market has gone into a little what? Consolidation. Now on the daily chart, we can't really see this. But with more detail on the 4-hour chart, we can see a slight consolidation. Now this consolidation is really cool because this is another part of the concept from the master pattern. We have a consolidation. We can put our value line or our pivot line right in the middle here, okay? See if it's pretty much stop it. Okay. Let me get this kind of straight. Okay. There's a couple of things that, understanding the consolidation box in a master pattern does for us. One, we can now see if there's a breakout. Okay. The market has broken out of the box. Let's take that off. But not so far. These are like fake breakouts. They're not solid breakouts. The market broke out on this candle here. This was the last day from Friday, I guess. But guess what? Look at where it closed. It didn't close below. Okay? So far, the market on this candle, which started today, it's not really moving below this level. The color switching back and forth right now is telling us how the market is fighting. The bulls and the bears right now are fighting, trying to decide if the market is going to reject this level and go back up, or it's going to push through. Back on the daily chart, when we were looking at this, we were trying to figure out what's going to happen in this whole area, okay? But on the 4-hour chart, we can see a little bit more detail. We can see the consolidation, and we can see where the market is fighting at the bottom of that consolidation. Now, if you look, remember the white line I drew? The white line is also where the 20 moving average is, the 20 cross and close on the monthly chart. So we can see on the 4-hour chart right down to the candle how the market is fighting the 20 moving average, whether the market is going to go bearish or reject this and turn around and go bullish. And of course, as you know, with the consolidation box, the market has opportunity for different patterns, the way it comes out of that box. Okay? One of the most popular patterns is a drop out the box and then a move up in the opposite direction. This move here, this may end up being one of those patterns, a fake out to the downside and then a move to the upside. If the move happens to the upside, there are two price levels you want to respect: the bottom of the box, the pivot line. If it goes above the pivot line, then you have a strong market for bullish, and then that becomes another target. You want to probably use as a take profit or something too. Okay, so here on the 4-hour chart, here's what we have. We have the last swing high on the 4-hour is actually inside the box right here. Now look, on the 4-hour chart, we don't yet have a fractal swing low. A fractal low will not form until 9 o'clock. That should be 9 o'clock. When this candle closes, this candle may give us a fractal low. We don't know. If this turns into a bullish candle, this could give us a fractal low, which means on the 4-hour chart, we know that we have an A, we have a B, and we will be looking at a potential C. If you are trading the 4-hour chart and that happens, you want to be looking to give yourself a supply zone covering these two candles right here, right there, okay? And you have that as your supply zone. And then you'll be watching for the market to come back and touch that zone. No trade until the market touches that zone. Right there. When we talk about patience, not taking every trade, taking only the best trades, this is an example of how we do that. We're only waiting for the best trades. See, if you think about it, some people would have seen this drop And I almost guarantee you, all of you saw this red candle so big and strong, you start saying to yourself, oh my God, I'm missing the trade. I got to get in, got to get in. You're chasing the market, trying to catch this trade, right? What you're going to find is if you do away with that emotional weakness, that's all it is. And you say to yourself, wait a minute now, if I try to jump in right here, how do I know for sure the market is going to go down? Well, the market did go down and you were trying to jump in right here. Look, if you have patience and you wait because you know how the market moves and you wait to see if the market reverses here and does a pullback and it does a full pullback based on smart money. See, the move back to this supply zone is all based on smart money. That's how the big boys are moving. And if the market does that, you're trying to jump in and buy here. But if you trade the supply zone, you will be trading like the banks and you will be selling from up here. Instead of trying to jump in and chase the market somewhere in here. Jump in, try to catch a couple of pips going down. No, you wait until the market comes back here and then you get in. Okay, so we can tell from the 4-hour chart, we're trying to see what happens right here. So let's go a little deeper into this. Let's see a bit more about what's going on. So now we're going to take that and we're going to drop from there down to our 1-hour chart. Now here on the 1-hour chart, we're looking at aqua colored swing highs and swing lows. Swing high, swing low, swing high, and there's not been a swing low yet. And that swing low, we have a swing low for the hour on this candle. Now the swing low has not shown up on the hour, on the 4-hour, or the daily. But the swing low is showing up right now on the 1-hour, which means we could be looking for a 1-hour pullback. And if the 1-hour pulls back all the way from when this started, remember this here, let me take some stuff off. Remember this here was when the market makers were in the market, pushing the market down. The footprints leads us back to a supply zone right here. Okay. Now, this supply zone is what we would want to see them come back to. We would want to see them come back to this supply zone. This is where the major run started, right up here. Now that would be nice to see them come back to this and then drop again. But this class, this session is not to teach it, but there are other areas in the run that the market could come back to and not hit this. You Then you were saying to me, Harcourt, about waiting all the time for the market to come back. While trading on an hour chart is not that bad, right? But even before the market hits here, there's a good chance the market could not come back to this, at least not right now. This is another area it could bounce off from. And this is a 5-minute area, a 5-minute supply zone. This is another area it could bounce off from and go back down. This is a 15-minute supply zone. Now, it has already hit the 5-minute supply zone, which means it's done an A, a B, a C on a 5-minute chart. The question is that the right direction? Is that the right direction? Because the market may be turning right here to go bullish. If it is, then we have to switch and come back down and start from here and look to see where the market, where the money makers, the market makers make a significant push. And as we get to a lower chart, we may see that push come back to a demand zone and push off again. And if that structure begins to form, then we can say the market is making a pullback on a 1 hour, and we can begin to see where it may decide to stop. Okay, so on the 1 hour, we're getting a fractal or swing low. We may have the beginning of a bullish structure on the way up. Okay, let's drop to 15-minute. So on the 15-minute, okay, you see the aqua line here. We are traveling, we are analyzing a downward move under a 1 hour chart. And on this 1 hour run, we're now looking at a 15-minute. And we can see on the 15-minute, the market, this happened since the market opened. The market created another small consolidation right here. Let me take this middle out and create a small consolidation box. Okay, you see this consolidation box here. So now we're looking for a breakout from this box to help us determine what's going to happen. Determine what this line is for. On the 15-minute, we have the last swing high is right here, which is green for 15-minute. And we don't have a swing low until this. If we were to determine a pullback for the 15-minute, we're going to want to take a supply zone right here, these two candles, okay? Some traders will take the last candle, but when you have two small candles like this, most of us tend to take the two small candles together, looking to see if the market will now come back and touch this zone for the 15-minute. Now let me show you something. We got three zones here. Remember, this zone here is a 1 hour zone. This is a 15-minute. This is a 5-minute. If the market is going to complete a 1 hour pullback, it is going to push through all of these zones to get here, meaning it will not bounce off of this and come down. It won't bounce off of this and come down. It's going to push straight through, touch this, and then drop. That's why you have to understand the direction of the market and the structure of the market no matter which chart you're on. Because if you didn't understand this, if you couldn't understand this right here is a swing high for an hour chart. This is why I use colors so I don't have to think about it. This is a swing high for an hour chart. I know it's a good possibility the market may swing back to this. So even though I'm down here and I'm looking at a 5-minute and a 15-minute, I know how better to trade and what to look for in case the market decides to pull all the way back to the 1 hour. So right now we're in a consolidation box on the 15-minute. Okay. So we need to wait to see how the market breaks out of this box. Our 1 hour, our daily level is right here. So it's going to be interesting to see how the market breaks out of this box. Does it break down, touch this level on the day, on the monthly 20 moving average, and then bounce up on the pullback? If that happens and the market begins to pull back, guess what? It's already touched the 5. I'll show you that real quick. Yeah. The market on the 5-minute, 15-minute. Let me show it you on the 5-minute, sorry. On the 5-minute, you can see, oh, I took it off. I want to keep something on, keep this on. Okay. On the 5-minute, we can see swing high, swing low. Market makers push the market down, created a supply zone. The market came back up, boom, hit the zone. What did the market do? After that, it dropped. The market makers created another sell. They made some money back. Okay? As they made this sell, okay, you have to notice something here now. You have to notice, look good.
Marvin, look like you're getting higher lows there.
Exact, man, you got the nail on the head. Okay? I just want to tell you, if this is going to continue as a bearish move and they make this low has to break this low in order to continue as a bearish, but it did not. It created a higher low.
Could be a reversal.
So we could be looking at a reversal. And if we're looking at a reversal, we're looking for bullish moves that are being made by the market makers. Okay, we see a bullish move here by the market makers. So we trace the footprints, come back to the zone. We need to see if we create another. This now becomes a demand zone. Okay. You guys are going to laugh in a minute, man. Okay, let's take off this demand zone. I got pushed through before. Actually, I won't take it off. Let me just use it. Let me just use it. Let me, I'll use this instead of creating a new one. Look at this now. Follow the concept. This is a demand zone for this last run that happened right here. Look what the market has done. Come back and touch this zone. Now, you must know there's a lot more detail and a lot more variation to what I'm showing you. Sometimes the market will come and touch, bounce off, come and touch again. Sometimes it may touch 2 or 3 times. But I can't guarantee you, but I can tell you 8 or 10 times. If the market leaves a demand zone and comes back and touches it, it will leave it again, even if it's only for a short time. Okay? If the market ever comes and touches a demand zone, you can look for a buy. Even if it's only a scalp, a short buy. In this case, it came off, it's coming back to touch again, and may take off again. Now, question, what is going to make this a bearish, a bullish trend? What do we have to see to make this a bullish trend? Someone tell me, what has to happen here right now? We've already touched the zone. We're trying to touch it again. What has to happen now to make this a bullish trend? A reversal, okay? Market reversing.
It has to
What
close.
do we need to see happen?
It has to close.
Close where?
Close. It have to close on this 5 minute. It have to close on a bullish and open up on a bearish. I
Open
was
up on a bearish.
Yeah,
Okay, you
like
lost me there.
this candle formation now, which is red. I would say if it closed in the red, the next candle it'll be a higher another higher low, and if another candle open um, um, bullish, then I would think she's gonna break your cross 20.
Okay, I see what you're trying to get to. Yes, we want to see the candle definitely push off from the demand zone. We want to see it cross the yellow. But crossing the 20 is not enough. We want the market to do 3 things right now for us to be confident that this market has changed direction. Okay? Actually, not 3, 1. Some traders will tell you, especially inexperienced retail traders, they would say, boy, if the market break this high, then we know we're going bullish. Next one might say, no, man, we got to break this high. They're both wrong. It has to be the last high, the last highest high from the low, and that is this high. This is the high the market needs to break in order for us to say that the market has changed direction. So I'm going to put an alarm right there. And while I'm sitting back for the rest of the night, I'll be waiting to hear if this alarm goes off. Okay? We want the market to break this high. And if this sequence here, this will be A, B, C. This is still in progress. Remember, anything can happen between A and B. Market can do all kinds of things. So right now, this Fibonacci sequence is still open. The market could even come down and make a deeper C, because A, B, they could take this C back down some more, as long as it doesn't take out this A. But at some point, if the market shoots up, breaks the high, which is the B, and then breaks this high from a previous cycle, because this is the last major high since the bearish move. Break that and close above it, we have got ourselves a reversal. Okay? And if the run from here up is a strong bullish run, then we have got ourselves some footprints. Okay? And we would expect the market to run up, come back again, make a pullback, hit a demand zone, and then take off. And that then is the beginning of a bullish run. And on that run, I'll be looking for all the opportunities to trade the supply and demand, catching the market when it comes back and takes off, comes back and takes off. Now, on a bigger scale, I'm going to be looking at my market on the 5-minute chart, okay? And if I put my drawings back on, I know on my 5-minute chart, this has already been hit. So if the market decides to go up, I'm going to be expecting the market to push all the way through this. As a matter of fact, as the market comes up from what we saw earlier, you open it a bit. As the market comes up from here and breaks this high, breaking this high may already take it above this level here. And this was a 5-minute supply zone. I will then trade that up, take profits probably at the opening of these zones. And if the market breaks this zone, then we know that the market has come all the way up to doing the 1-hour supply zone. Okay? So right here is where the whole trade opportunity will rest, probably for the rest of the week, maybe a little bit more if the market moves a lot. We may hit a 1-hour supply zone before the week is out and watch the market begin to drop again. Okay? Now, depending on how things look, I can also drop to 1 minute, but I'm not going to do it now. I want to get into some copy trades, but I want you to see this is the picture on the 5-minute. Now you all see we came all the way from the monthly chart just to know how to trade this area right here, because this is where the opportunity is. All right, and 5-minute, because we know how much pips US 30 provides, and we have to provide a decent stop loss and everything to make sure we can cover the trade. Now, normally when you do place trades, if we're going to put if I was trying to trade this move here right now, I would be having technically, I would have a stop loss right below the zone and an entry right at the beginning, top of the zone. Okay. Of course, I'm not trading now because I do not trade outside of the main session areas. Trades happen today. All of this happened today. You said, boy, Marvin, you missed that. Yeah, I missed it. Because it could have been something totally different. So by the time the market opens on Tomorrow, Tuesday, I'll see where we're at and see where we can find a trade. So, yeah, stop loss is normally done right below the zone, and entry is either coming up, going back up here from the top of the zone, or sometimes there's a way to manage the market as it moves deeper into the zone and begins to take the turn to go back up. You can also put your stop loss right below the last candle where the market actually turned, right in here. Another way, a more conservative way, is as the market turns and starts to go up, you wait until the market cross and close the 20 like we used to do before. And once the market crosses and closes to 20, you get in. Now you lose profits between getting in up here somewhere and as opposed to getting in on the trade down here somewhere. And sometimes I will take this trade. I will not enter down here. I will enter after the 20. I want y'all to know that. It's a more conservative entry. I will have a confirmation because the market will have already rejected this zone to make a buy. And I want to avoid an experience where the market goes up, comes back in, or maybe does a reversal. But once you see the market comes down to the zone, a demand zone, it's very difficult for the sellers to push this back down because there's so much buying pressure from the market makers because they want to buy at this low and take the market back up. So I want to be sure that momentum is moving across the 20, then I get in. And then I look to get out right up here somewhere because the market likes to push off of the supply zone, maybe even once, twice, maybe even 3 times, push off before it actually breaks through. All right, so I'm not going to do the 1 minute. So that is the goal, friends. Okay, we want to break this high. And this high also happens to be the high of this box. Okay, and I want you to see how everything comes together. We're using the consolidation box and the master pattern. We're using supply and demand. We are following the structure, market structure based on the Fibonacci sequence. We are following smart money. A lot of the concepts we learned in the past comes into play. Even candles, that's the last one because we got to get to C trigger. Candles, like where I saw it just now, the back, I just saw that candle. Where is it? Okay, this candle right here. You see this candle. This right here. What is that candle called? Anyone can remember? What's this candle called?
Is that an indecision candle?
It's an indecision, but it's also what we call a rejection candle. Okay, it's a doji rejection candle. The market came down and rejected this level. That candle, there is a signal of the end of a low. That candle right there. Look at this candle right here. That candle. That candle is also a signal that we have hit a low. Anybody remember this candle? What is that called?
Um, I know every time you see that formation, it means you're going up. Is that a dark cloud cover?
No,
No? Right.
no. Someone else will take a stab at it. Troy, Ginger. All right.
Yes, Marvin. Yes, Marvin. I had to
Yes,
unmute.
yes. This candle. What's this candle called? Can you remember?
Which one?
This one right here, the blue one.
Um, you talking about a formation or just a single name for a candle?
Well, just a single name for a candle,
Oh,
even though this is
mm-hmm.
a formation, but the candle itself, it's something to do with a man. What is the man doing? No, not a man. Sorry, it's something to do with the god of thunder. The
So I
god
forget them.
of the what?
I forget them. I
Yeah.
can see the page right now with all of them lying up on there.
I know. Hey, Troy, what you saying? You still listening? Marlene, let me help you all out. This is called a hammer.
Oh,
Remember?
okay.
Yeah,
Oh yeah.
remember this part? You grab with your hand like a hammer.
Mm-hmm. Mm-hmm.
Now, hammer, okay, this here is what we would call a morning star.
Mm-hmm.
Okay, that was strong bearish, followed by a like even indecision, a doji, a hammer, followed by strong bullish. Okay, morning star. Um, so all of these things come back into play. Um, everything we did with cross, 20 cross and close, understanding what the 20 is, comes back into play. All of it comes back into play. But the main thing remember is we are not trading anything but price action. Price action is what we're trading. And we're only taking trades primarily when the market comes back, hits our zone, and takes off. Okay? That's what we're waiting for. That's how we're trading. Now I can trade other ways. And if the market gives me a really good structure, I may take a trade. For example, if the market is in a trend, is trending, and it makes a pullback, but the pullback is only to the trend line, like this move right here. Okay? This move right here uses another candle for you to see where the trade is. Okay? The market pulled back. Look at this candle. That's a strong doji. That's an indecision candle and has rejected. It has strongly rejected the moving average. We are already in a trend, rejects the moving average. Okay. You could drop to a 1 minute chart and take that trade right on that, right after that rejection. And the market continues to drop and drop and drop and does another pullback right here. and then drops. Okay. Okay. Any questions? You understand where we are on the trade? Okay. Waiting for the market to see what's going to break this high. Troy, anybody have any questions? I put quite a few videos in the group in the last 2 days. You can also go back and find some earlier ones talking about supply and demand. I want you to know supply and demand is the same concept I've talked about before when I mentioned order blocks. Order blocks are the same thing as these supply and demand zones. Okay, but when we use the term supply and demand zones, it just gives it more detail. We know we're talking about an order block that the market pushes down from, called supply, and we know a demand order block that the market pushes up from is called a demand zone. That's all. Same thing. Any questions? Okay. With copy trades, let's jump to copy trades for a second. Let me just say off the top, where we are right now with copy trades is um, very clear. I've been dealing with a number of people doing their setups, meaning I've been going through, making sure that your accounts were linked properly. You can move in and out. You're linked to CTrader. You've opened your live accounts. Okay. Once that is done, and if you haven't done your setup yet, and you still want to get it done, just give me a shout. Let me know. Monday is not a deadline. It's just a starting time. Okay, it's not a deadline. So just let me know when you got things in place. You have the time to do the setup. All you have to do is download TeamViewer on your laptop, send me a picture, and we make an appointment to sit down for me to come in and do it remotely. I mean, if someone needs to still get with me, we can arrange it. No problem. But moving forward fast, the team viewer is a lot quicker. They can get the same thing done. Once you've been set up, your next step is to fund your account. Okay, we want to start with a minimum of 300 to give us a little bit of cushion. Is 300 is even not much at all. If the person doesn't know how to trade, 300 could still be a problem. So I will be trading very, very small. So don't get discouraged if you come and you see small profits. You know, if you what's going on? We can't make, I was gonna make a couple of $100. Hello? Yes, it's possible it's gonna come, but starting off, I am not taking that risk. No, sir. We'll start off with very small lot sizes, and it may not all be in US 30. I'll be trading gold as well, GBP USD. I may even trade EUR or an AUD pair in Forex because it allows me to offer less risk and still make some good, still make some money. Not as much as US 30. Okay, I am going to be very conservative. Very conservative. My number one goal is to protect, preserve capital, not make money. But by preserving capital, every money that we do make, we get to keep it. So for me, it's wiser we start off small, build the accounts up without major losses. Okay. So once you have funded your account, just contact me when you're ready to start copy trading. But make sure the account is funded first. Just get your credit card, your debit card, fund the account, and then call me and say, hey, Marvin, I'm ready to start. Then we'll go back on TeamViewer and I will connect you to my copy trading official provider copy trading account. Okay? It's really that simple. It's really that simple. So when
What's
you
the
go
name
to,
of your account?
I will I will tell you that when I connect you after tomorrow. Okay, I haven't decided which name I'm going to finalize with, but the one I was using on the first round, it's the master pattern, but um, I'm going to be using a name that encompasses more of the smart money concepts. So it's going to be something like smart money or what I call it, or a combination, the master smart money pattern. But that may be too long. I just haven't decided. I want to research one or two more things before I decide. Okay? But it'll be smart money. The master pattern is a part of the overall smart money concept. So I will connect you and you will be able to go from there. Um, let's see. Okay. For those of you who don't know, what I just did was if you're in trade, if you're on your charts, you're trading, you want to go into copy trades, okay? On your chart, up to the top left are three lines. Once you click on that, it's going to open up and give you a number of options. You have, before you click on that, this here takes you to copy trades. This here is for trading. Right? This to do with robots and some other things. But these are the main two you need right now, trading and copy trades. Once you press copy trades, that will open up this page. Copy trades is run by C-Trader, and C-Trader is a different company to IC Markets. C-Trader is a trading platform company that offers copy trade. IC Markets is a trading broker, but they are working together as partners and their programs are linked. Okay, so get it cleared up. So I think some people may be still confused. C-Trader is a trading platform offering copy trades. IC Markets is a broker, but they are partners working together and their programs are linked. So when you press copy to go to copy trades under C-Trader, you come to this page. Copy trades does not run as an app, as a program the way the C-Trader trading chart is. It's one and the same, but when you want to get to copy trades, this page, you have to launch it here. Okay? And when you launch C Trader Copy, which is what we want to do, it opens up to an online page. Okay? C Trader opens up to an online page, and that's this page here. So when I come to link you, I will come to a page similar to this. We will find my strategy from here. And once we find my strategy, I will link you from your trading account that you're going to use for copy trades, whichever live account you want to use. Or if you prefer to start copy trading using a demo account, you can do that too. I can link your demo account to copy my trades. And then when you're ready to go live, you come back to me and then we can link your live account to copy my trades. And once you've done that, everything else is automated. And they offer a lot of information and a lot of options. Now, and Harcourt, I know you would, this sound like you, to say this. I was planning to have a sort of like a tutorial for this available today, but it's not. Okay, I'm still going to do one. So you guys can come in and sit in on a very short webinar with more detail about C Trader Copy. But I can tell you one or two things here now. When you sign up with the C Trader Copy, your account will be linked to my account and is managed automatically by a system by C Trader. Okay? Your account will trade trades that I make based on equity. If I put in a trade for $1 and the equity of your account is only half the size of my account, then your account will automatically put in a trade for half the size, 50 cents. And it will trade all of our trades on a ratio. You get to control everything. If you want to stop copying, there are options for you to do that as well. See, everything is not showing up for me because my system is designed for a partner and someone who is offering the program. But you will have a button on the side, the same way this says start copying. You have an option to press a button that says stop copying. And I don't control that, you do. So you can stop copying, you can start again. You can see the trades that I do. You can do a number of features. with your copy trades. The main thing is I want you to know is you can and will be able to control the process.
So
You
Marvin,
can, for example, set an equity stop loss, which means if you invest $500 and you say, okay, we all know that trading could go up and down. Okay, there's no perfect situation. Um, if my account drops, let's say to $200 or $100, you can say that is my equity stop loss. If things go really bad and my account drops down to $100, that's a cut. Copying automatically stops and your account stands still. You can control that.
so Marvin, if you're in a trade and I'm copying my program is copying my account is copying after you. If I want to come out of that trade at a certain profit level, I can do that as well.
Yes, you can. You can simply stop copying. Whenever you stop, wherever it is at, it get cuts right there. And you can stop it right there and take that. Your account will be credited with that profit where you stopped. Yeah, it's very simple, man. I mean, the same way you have start copying on your program, you have stop copying. You can stop loss margins. You can check out the records, the history. Yeah, and you control it all from right here, all from right here. And I'm not the only. I won't be the only service provider you can copy. You can copy somebody else. Anyone else in this program, you can copy if you want to. Just take your time and look and see what they're doing and then go with them. Now I know you'll be going with me because you know me. But if you want to go with somebody else, you can just as well. Okay? And if anybody is not, not too sure or you're not ready to start live, but you want to kind of jump in, you can actually have me connect you to a demo account just to feel your way through it. And then we can come back and connect you to a live account. Um, the fees, let me go over it real quick. There's a fee for the service, okay? And the structure is done this way, right here. M is for a management fee, an annual percentage of investors' equity. I do not charge that fee. The second one is performance fee. Applies to the net profit using a high watermark model. This one I do charge. Okay, they take 30%. Whenever you make a withdrawal, or if you close the program, the 30% based on net profits are deducted and the balance is put to your account. So you don't have to pay me yourself anything. The company, the system charges for the service and pays me. It's a 70-30 split. So when you're doing your calculations, don't calculate on 100% of the realized net profit. Okay, make sure I take 70%. So you don't get thrown off wondering why you thought you're supposed to have $1,000. You only have $700. What the hell going on? That 30% is a service fee. Okay. Some people charge a 3. I don't. Just a performance fee,
So,
and you
so
can always
Marvin,
check.
the So a $300 account is actually 210.
No, not if, not, this is on net profits.
Okay, on
This
profits.
not,
Okay, okay. Sorry.
yeah, yeah, on net profits. Oh, and let me tell you now, some people who earn profits already have taken money off, and moved their money and so on. Let me say, if you have profits, don't, I mean, it's okay to let it sit and build, but if you ever want to move your money, you can just move it. Okay, you'll move the money from your corporate trade account. Okay, you're gonna move it from that live account to another live account and then withdraw it from that account back to your bank. So anytime you see from our trading profits on your account, if you want to move it, move it. All I suggest is if you stop at 300 and your account gets to say $1,000, always leave enough to grow your account. In other words, you stop at 3, it's up to 1,000. Don't take off 700. Okay, put 2 so that you leave a trading balance of 500, and then take off the extra 5 if you want to. Always leave extra to grow your account to trade from. If you don't need to take it off, then leave it. Because the bigger your account that you're trading with, the bigger lot sizes you will be able to have. And it doesn't matter if your account is bigger than mine. You can make more money than me. Because if my account is 500 and your account is 1,000, and I trade $1 per pip, your account will trade $2 per pip. Even though my account is the provider account and I'm trading $1 per pip, your account have twice as much equity as mine. So they will trade your account for $2 per pip. Now, risk, I will not be risking more than 3%. 3% of the account, I will not be risking more than 3%, and which means many times you're going to find me trading on a 5-minute and even more times probably on a 1-minute chart, because the stop losses have to be as small as possible, especially starting off. We have to grow these accounts. So risk maximum is 3%. My trading times are going to be primarily the New York session, which means I'm primarily going to be trading officially from 9:30 to early afternoon, 1, 2 o'clock. Why? Let's face it, I am going to be scalping. I'm not going to be doing long-term trades. I'm not going to be doing swing trading. The account starting off is too small for swing trading. I am going to be scalping as a day trader. Okay, get in, make 50, 80, $100, whatever, you get out. We find another setup and get in, make 50, 60, 70, $80, get out. And maybe that's it for the day. Maybe there's a third trade we get in, and we get in, the trade gives us a trend, and the market continues to trend for quite a while, and I get all the signals to stay in, I might stay in. I've done that a couple of times, and usually when that happens, I end up with you get a nice $500, $600, $700 in one day. But that's not often. Not every day that happens. Okay, I'm looking for these supply and demand trades. Get in, hit the target. I'm not going to be taking any excessive conservative stop. Take profits. Okay, next level take profit. I am in and I am out at that level. If I get a signal or a candle formation that says, hey, or if I see where the next high or the next low gives me enough room for the market to run, and I say, okay, but I'll be getting out most of the times at the next available high or the next available low, and that is going to be how we build the accounts. If the market pushes through this 5-minute supply zone and starts to go up, okay, if I get in somewhere around here we are now, I will take out my next take profit right here. If I get signal that the breakthrough is ready to happen, I will take another take profit as the market moves up, breaks its high right here. The market may go deeper into the zone, but not me. I'm coming out right here because I know the market likes to hit the zone and then freak out and sell. Hit and sell. Hit and sell. No, I'm coming out right here. Okay? So, friends, that's how we're going to do it. I'm not going to be doing, I'm doing small trades at first. Very, very small trades. Very small trades. 1 minute chart, most likely. I'm going to share this one, then we're done. I've made a promise to Ginger. I think I'm breaking it now, so let me make this. Don't run me yet, Ginger. I'm
You
finishing.
done been past that. You done been
Oh,
past that.
I'm finishing right now. Okay, wow. Okay, this is a 1 minute on gold. So this is a trade you could say we missed because I'm not trading tonight. The market came up from here, hit the zone, came back, hit the zone again, and has been on a drop. This was a pullback. Hold on, a little too small. You can see this. The market came up, hit this zone, dropped, came back, touched another zone, and has dropped again. And is dropping now as we speak. Okay. This is what my trades will look like on a 1 minute chart. This is now 1 minute gold, and you see the 1 minute chart gives us the same structures. Like I tell you, it's what they call fractal, which means it runs on every type chart. Oh, right there. Okay. And what I'm telling you is I am not going to be trading unless the market comes back into my zone. Okay. Now, The supply and demand zone are not the only zone. There are other zones in the moves. Let me show you one real quick one. No, I can't see any. Okay. Right in here right now, there's a zone right here, from here to here, and from here to here. Okay. These zones in here are called imbalance. Sometimes the market respects those zones as well. They're called zones. They're called imbalance. And then there's another zone that sometimes the market respects, a zone like this right here. This is called a drop-based drop. The market will respect this zone as a supply zone. So for me, the market will have to come to a zone for me to take a trade. All right, guys, that's how it's going to work. All right, I want to say that for the time being, I'm done. Anybody have any questions or concerns, shoot, let me know, call me back, text me back. Just know that the next step is to if you haven't gotten your account set up yet, let's get that done. And if you have, then the next step is to fund it. And then after you fund it, when you're ready to start, you contact me so I can connect you. I talk all night.
Yeah,
All right,
Marvin.
for end of day tomorrow, I gonna call.
Okay.